Hello, my name is Steve Bigelow with the Candlestick Forum. We saw a good strong signal again in the markets, strong bullish signals. I don't know why this thing does that, but we could see the J-hook pattern setting up again in the Dow with stochastics coming back up after an inverted hammer, bullish engulfing signal right at the T-line, positive trading giving us the prospect of another wave to the upside. At the same time, although the NASDAQ is not back up above the T-line, you can see that it's kind of in a wedge formation, meaning there's likelihood it could trade up positive, but the overall analysis is it's kind of moving sideways. So the hard selling of the NASDAQ seems to be over, and it's going into a sideways consolidation stage. Still makes sector rotation or sector specific trades very high probable. So there's some very logical profit taking techniques that could be implemented, that were implemented on Friday. We know the truism that the further away you move from the T-line, the higher the probability it's going to come back and test it. So a very simple technique for maximizing your profits up in this area versus waiting for it to give up all that profitability. And that's simply moving to the 10-minute chart. So when you're way up above the T-line, you flip to your 10-minute chart and you keep moving your stop up. As long as it stays above the T-line, you're all right. But if you have your stop just below the T-line, when it breaks down through that level, you're taking profits way up here. Not a difficult process, just a very simple use of human nature. Kind of the same scenario when we did our rare research on eyes, and they had new equipment coming out to help people with blindness. That information or that product was approved by the FDA. Buying on the kicker signal in this area, when you move that far away, you started taking profits up here with the expectation it was going to come back and test the T-line. So we use that same scenario because we had some big price moves in stocks like VIAC where we went short. Look at your hanging man. Gap down through the T-line. Started buying puts. We saw it move to the 50-day moving average in doji. Was that where it's going to support? Very simple analysis. We use the doji rule, which simply states the price is usually going to move in the direction of how they open it after the doji. Had they opened it positive and started trading positive, it would have been pretty evident that the T-line or the 50-day moving average was going to act as support. The fact that they opened it lower said there was still more downside, that possibly the 200-day moving average was your target. So how would we take profits here? Note how far away you are from the T-line. You flip to your 10-minute chart, and once you start seeing buy signals showing up on the 10-minute chart, that's where you take profits as far as short positions. Not a difficult process, just very simple technique using the information built into candlestick signals telling us what is going on in investor sentiment. So there are some strong sectors this week. The steel companies and the mining companies related to the steel industry. So we see in BBL, an iron and steel mining company, your hammer gap up above the T-line, making for a very strong prospect of an uptrending market or uptrending price. Schnitzer Steel, bullish engulfing right off the 34, gap up above the T-line. Look for wave 3 to be in progress. So as long as the markets are still heading up, go with the strong sectors. That'll be it. We'll see you in the chat rooms.